Now let's take a look at your markets picture, kicking things off with the JSE. A mixed showing from the JSE after getting a negative handover from Asia. Now, while locally things seem to be positive, global developments capping some of those gains. Traders here at home also digesting a raft of earnings with 91, Astral and We Buy Cars out with numbers. Looking at that picture, we are seeing the financial 15 in the green, up 1.4%. But trading in the red is the resources 10 complex and industrial 25, down 0.25%. And taking all of that into account, the all share trading in the green, closing 0.33% higher. Over in Wall Street now, markets on that front kicking the week off on a downbeat note. Caution remains the name of the game ahead of a big week, with traders eyeing Fed minutes, Nvidia's results and the resumption of government data releases. Some flat trading on that front, with the S&P 500 down 0.09%, while the Nasdaq sheds 0.06%. Leading the losses on that front is the Dow Jones, down close to 0.2%. Now let's take a look at what's playing out in Europe. Sentiment on that front also sour, with investors awaiting key data out of the UK. Inflation in particular, which could provide hints on the Bank of England's next move. Looking at Europe, the FTSE 100 pretty flat, losing 0.05%. On that front, the German DAX is leading the losses, down close to 0.9%, while the CAC 40 sheds close to 0.5%. Let's take a look at what's playing out on the currency scene, kicking things off with the rand. Now, the local unit seems steady, as investors are somewhat brushing off the credit upgrade as focus shifts to the SARB's final monetary policy meeting for the year. The dollar to the rand at 17.10, the pound to the rand at 22.51, and the euro to the rand trading stronger at 19.81. Now let's take a look at your other currency pairs. The euro to the dollar stronger at 1.15, the pound to the dollar flat at 1.31, and the dollar to the yen trading weaker above 155. Now we're now joined by Paswana Mpahlele from Makwe Fund Managers. Paswana, thanks so much for your time this afternoon. Now, keeping that markets picture in mind, I would have expected equities and the local unit to trend higher on the back of that ratings upgrade. Why the muted response, even as sentiment here at home is improving? Are we just seeing, the ramifications of the sour sentiment on the global front sort of playing out here at home?
Afternoon. Yes, we got the upgrade. It was positive, but the fact that we are not seeing it filter a lot through to our markets broad-based is at the back of the fact that we are seeing that the local, we've been seeing that the global markets have been fighting with uncertainty around that interest rate decision, whether in the US, whether it's going to be, and it's from the 90 probability now below 50 has caused a little bit of concern. And the upcoming data is the key thing. There are concerns around the data, whether it's going to be reflecting that weakness or is it be stable enough to encourage that the Fed can skip this rate cut. And that's where we're seeing it, but not all is bad, because from a rate cut, from a rating improvement, we've seen early indicators such as our bond, our rand are improving because of the investor confidence has improved. We've seen the bank's financials are up to be holding us up. So some has filtered through. It's just that these global developments has kept that as bay, but we should see it filter through going forward, because investors are expecting a Goldilocks environment going forward when the fear of the fiscal outlook we're sitting at and doing better is that stabilization, and this should bode well for our economy going forward, from growth stabilization and inflation and cut lower.
All right, let's hit pause on the conversation. That was Paswana Mpahlele from Makwe Fund Managers.